Hey everyone! Imagine a world where you never have to file income taxes again. No more W-2S, no IRS audits, and no deductions to worry about. Sounds too good to be true? Well, some economists and policymakers have proposed replacing the current income tax system with a simple 10% transaction tax. But how would that work in real life? Let's break it down. First, let's talk about the current system. The U.S. tax system is primarily built on income taxation, where individuals and businesses pay a portion of what they earn to the government. This system is complex, with numerous forms, deductions, and credits. What if instead, we had a flat 10% tax on every transaction? That means every time money changes hands, whether you're buying groceries, receiving your paycheck, or making a business purchase, 10% goes to the government. Let's say Sarah buys $100 worth of groceries. Under a 10% transaction tax system, she would pay an additional $10 in tax, making her total bill $110. Simple, right? But let's see how this works on a larger scale. Now imagine a business purchasing $10,000 worth of supplies. They would pay an extra $1,000 in tax. Businesses would no longer have to worry about corporate income taxes, deductions, or complicated filings. The government collects revenue immediately, without the hassle of audits. Consider John, who earns $5,000 a month. Currently, various taxes reduce his take-home pay. But under a transaction tax system, he receives the full $5,000. When he spends it, he pays the 10% tax. This way, John controls how much tax he pays based on his spending habits. This system has several potential benefits. Simplicity. No more income tax filings or IRS headaches. Transparency. Tax collection becomes straightforward and visible. Inclusivity. Everyone contributes, including those who currently evade taxes. However, there are concerns. Regressivity. Lower income individuals might pay a higher percentage of their earnings in taxes since they spend most of their income. Impact on large purchases. Significant transactions like buying a home could become more expensive. Business costs. Companies might pass the additional tax costs on to consumers, leading to higher prices. While the idea is intriguing, implementing a 10% transaction tax in place of income tax would be a monumental shift. It could simplify the tax code, but also requires careful consideration of its economic impacts. What do you think? Could this be the future of taxation? Let me know your thoughts in the comments. If you found this breakdown helpful, give us a like and subscribe for more insights into finance and policy. See you in the next video.